Hello, everyone. Wobbly Giraffe here. I am going to go ahead and review my current research on silver miners. So I think I made a very good, strong case for silver in the current economic environment. I encourage people to look at reddit.com/r/Wall Street Silver. My video where I tried to break down Happy Hawaiian's excellent due diligence seems to have been deleted. So I'm a little frustrated about that because I think that was a pretty good video. Regardless, read SLV is a scam by Happy Hawaiian on Wall Street Silver. Moving on from that, I think I made a strong case for we're seeing silver shortages start to occur, which then means there needs to be more silver brought to the market. And the sector or the stocks, companies that are going to benefit from this are silver miners, right? That's the only way to get silver that I know of, unless someone knows alchemy. Okay. Excuse me. Moved into a new hotel. The air is a little musty. Anyhow, what I haven't necessarily covered is my research in silver miners. Now, I seem to have lost some progress. I'm not sure whether Windows didn't save it or whatever, but I thought I would step through it, give the logic of how I'm approaching this situation, and then I'm going to go ahead, fill in the numbers, and come to a more complete conclusion. Okay. So, kind of going over an overview, I took essentially, what is this, 14 companies. I actually expanded a little bit. But I took the top silver producers by percentage. Okay. I did not necessarily take the top silver producers by amounts. Okay. The reason I think that is important is we could mine 100 million ounces versus 1 million ounces, right? But if our costs to mine that 100 million ounces are like uneconomical, or we just have shady business practices, or there's some other underlying issues that we don't necessarily know about, which in a previous video, I talked about Glenn C and a lot of the other researchers that back him up, talking about how a lot of the top players in this field are not in good straits and they do trickery to essentially make their company look good on the books, right? So that's why I went with top percentage of silver versus total amount of silver being mined. Okay. So here's 14 of them. I went ahead and put Silvercrest at the top. I don't think they were the biggest buy market cap. Yeah. Well, regardless, ones I've heard people talking about on the forums are Majestic, First Majestic. Pan American Silver was another one. I think Fresh Neo. I hope I'm saying that right. Helka were some I heard, and then I kind of included some that were more focused on gold, but still had some silver. Okay, so I tried to throw out a big net there, but really, it's probably down to maybe those 9 or so companies. Okay, so I'm going to try and just get some of the basic information back in and build on that. Okay. Following up, I have a tab here for formulas, just for easier understanding for viewers. I'm going to definitely build on this, but this is our most important formula that I'm looking for here. Okay. So this is what Glenn C kind of touched on with discounted cash flow, for each mine. My logic is if a company has multiple mines, that can get tricky, very messy, very quickly. Okay. And I think something Crestcat Capital, which I believe is some hedge fund or just a fund in general, published and looked at, and I know Chris Ritchie talked about this in his videos, was this formula of the 12-month median trailing cash flow over the enterprise value. So that is this formula over here in green. Okay, that's our overall formula. Now, what I tried to do was just break it down by each segment of that formula for easier understanding. So we have the 12-month, right, the previous year of each month, the median, which is the middle. I might also calculate this with the mean I'm not necessarily sure why median was picked over mean, but that would give us a range, right? So that would give us the center number in a group of numbers. I probably will do it with mean as well. And we'll see what happens, right? Does it give us a different picture? Moving on, we have the trailing, right? So that's each 12 months trailing. So if we move forward a month, we remove the end 13th month and add the newest month to keep it at 12, right? We have free cash flow, right? FCF. And what I also did for the formula, and I'll continue to do that I actually really like, is put the abbreviation below it that I will use and I see online typically, and then try and expand what that is, right? So what's free cash flow? Well, okay, we call it FCF. And one of the more common ways people calculate it that they say is easier from the financial forms is it's the operating cash flow minus the capital expenditures. Now, I should probably define those as well because those are things under themselves. Regardless, I didn't get that deep. I'll update that. Moving on, we have enterprise value, which is the bottom part of that formula, right? So enterprise value, one way of calculating, because there's many ways to do a lot of these formulas, was basically the market cap. So the price of the share times the volume, or the number of shares outstanding, excuse me, plus the preferred stock, plus the outstanding debt, plus the minority interest, minus cash and equivalents. So I also went ahead and abbreviated those, okay? So we essentially have what shouldn't necessarily be too hard of a formula to calculate, and we'll probably do that across a couple of financial periods for the company, okay? Because we would ideally want this to be positive and increasing, okay? It's a time metric because we're using the 12-month trailing period, right? So I'm going to go ahead and start plugging and chugging on that. And then what I did to try and follow what Glenn is saying, and I actually had started this before reading that article. I think that article kind of solidified that logic. I very much agree with him there, and what a lot of the doctors, PhDs were saying on this is I want to also go ahead and break down essentially each company. So here's SILV, and then each mine, probably just their major mines in that, okay? So for Silvercrest Metals Inc., SLIV, their two main mines were Las Chispas, which they are getting deeper and deeper in, and they recently bought El Pichacho. I hope I'm saying that right? There you go. They also have Cruz de Mayo. I put that in yellow. And the reason I did that is I believe they was it in litigation. I don't see that here. For whatever reason, they said they weren't mining it. Okay. And then there's kind of this other projects, which once again, typically going to be in yellow because they don't have plans to mine Angel de Plata and Estacion Iano. I hope I'm saying that correct. If I'm not, sorry. And then what I do is I go on to the next company. So here's AG, here's some of their main mines, blah, 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 so forth, so forth, okay? I'm probably gonna do that for each of these top mining companies. The dilemma I face in this sort of research is a lot of the websites have either the information isn't necessarily clear, it can be hidden in the text, and like they can talk about it very casually. So I'm like, well, I don't know if this is the same metric that this company is reporting over here, right? And that goes back to what Glenn said of there's a million ways to kind of hype up stuff. And this doesn't necessarily give us an accurate picture of the company. What else? So it is hard to find some of these numbers, plain and simple. So obviously this formula, I think, overcomes that a little bit of what Glenn was talking about, because this does come from their accounting books. And this should hopefully, and we'll see, be a way to essentially perform Glenn and some of these PhDs analysis for the company over time in a more standard format, right? Because the websites can be not necessarily line up for a lot of these numbers. Okay. So overall, I'm very happy with the layout of this Excel book. Definitely trying to keep it organized because there's a lot of info and I'll just throw stuff in these worksheets and then it's like, this isn't on this website. I don't know if I should use this, blah, 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 right? So there's that. And I'm gonna just very quickly try and build it up in my free time because I don't think there is a lot of time to make these investment decisions. I'm off, excuse me, excuse me. I'm off for most of tomorrow. So, hey, rise and shine. I'm going to get up, guns blazing, and plow through this research. And then I'm going to probably link it on my Twitter. I'm going to obviously post videos on it and probably put it in the Wall Street Silver forum. Sorry, that's me looking at work. Shouldn't have done that. Whatever. Habit. What can I say? So that's more or less the course of this video. I wish I still had that SLV is a scam video. I felt like I broke that down pretty well. And I've been meeting regular people just kind of on the road, talking to people about silver and Silvercrest metals. And people are super interested in the YouTube channel and Twitter, which I think is awesome. Yay. That definitely was kind of a good intro video. So yay. That was like 2 hours to kind of talk about and break down, but whatever. It happens. So read that article. That's Happy Wine SLV is a scam. I've tried to point out some of the red flags in the American economy in the past couple of videos. I would argue, I think I've been telling people we have like 6 months to 2 years. To be honest, I think we don't have that time. A lot of the economic indicators that provide red flags for the economy are entering like super red flag mode. So I talked about how the S&P earnings after inflation just turned negative. Previously in American history, when that happens, we have a recession or a depression. The Federal Reserve, the money printer, is just going off a cliff with the M3 money supply. What else was there? I mean, Michael Burry basically bet against the bond market. I think last video I talked about how the yield curve is flat, which is not good because when it inverts, you don't always have a recession, but when you do, you have one, right? That's the economic indicator that over predicts recessions, but it aligns with a lot of these other indicators, in which case I think it's very valid. The Schiller index and some other similar, like, is the stock market in a asset bubble sort of situation? Let's look that up. That's entering ridiculous levels. Chromium, baby. So let's look that up because I haven't necessarily talked about that yet. And this relies on PE multiples. Where's, at 2021. Either way, you can see it's just, it's taking off like a rocket ship, which is not necessarily good for us. Not sure that I talked about home prices. No, that's not what I want. Let's see. I know someone posted about this on the internet as well. Where are you? Well, Robert Schiller sees Wild West mentality in housing stocks. When was this? That was this year. Where's your index, buddy? I think I did talk a little bit in a previous video about home prices just going ridiculously high, which that might be good if you're looking to sell a home. But then the trade-off is the housing market is starting to turn around. I think Michael Burry either talked about, I'm not sure he published research, but he says he's seen that uptick in mortgage defaults. And he says that's a bubble. So when that turns around, you're looking at the housing market crash, right? People call this the everything bubble because it's like housing's a bubble. Most forms of debt are bubbles. What else? In the stock market's definitely a bubble. The bond market's not a safe place to essentially hide or not hide, excuse me, to park your investment. Bond market's not good at all. Interest rates are basically zero. And after inflation, they're negative. So I think that's a very strong case for Silvercrest metals. Okay. Because there's not too many other choices when money is being thrown at everything. Okay. Um, now I can't find it for 2021. That's odd. Let's look at the Buffett indicator. See if we can find that real quick. Oof. Yeah, so as of June 3rd, 2021, right, we're seeing, let me zoom in for us a little bit. Hopefully this graph stays good. This actually might have been what I was looking for. So the Buffett indicator, so I'm just moving my Zoom stuff around. You can't see it. Technology, right? We can see that it is in seriously overvalued zone. Okay. The internet bubble basically barely touched that area. And now we're very clearly in that. And you can see we had the financial crisis 2007, 2008. It's underplayed, and it looks like most of the 90s, it was kind of in that undervalued zone. Now, this sort of thing isn't necessarily telling us there's going to be a recession or a depression. It's a good way of looking at valuations. And when we combine it with these rest of the graphs I've talked about, it paints a very dangerous picture for the American economy. Yay. By that, I'm being very sarcastic. So housing prices bubble, stock market bubble, bond market, you can't go to. What does that really leave, right? And to me, it's silver. Federal Reserve printed 45. I've been saying 45. I heard 45. When I looked it up, I think it was like 40, maybe a little less, like 39, but like that is so outside the historical norm. So what's the move? Silver, right? Commodities in general, but silver is the most undervalued. And the reason I'm in Silvercrest Metals is I like their management. I don't think they frill stuff like a lot of those other companies. They seem very into the core business of mining. They play it safe in a risky way. And by that, I mean, they're doing exploration. That's the most risky aspect of mining. Okay. Usually exploration companies search for silver, and then when they find that mine, they sell it to a bigger miner, right? They are taking it all the way from they're pretty sure they can find silver, which they have, and then they're going to mine it themselves. So they save costs a lot that way and make more money. Okay. So they definitely are trying to change up the game in the silver market. And I'm in them for leverage, right? I really like the company, really like the stock. I think they do a good job. Have no reason to dislike the stock. And I think they're very undervalued for essentially the amount of silver they have and what it costs for them to mine it, right? So I think those are very good, easy buy and hold plays, right? Let's see. What else is there? I think that is probably about it for this video. I just want to kind of give a status update on my research mainly. I'm really going to try and fill in those numbers. Once again, a little more tricky with silver miners. Like Glenn said, they release certain legal forms. I think the NI, there's a couple of letters and numbers, was one of them where they can paint a very rosy picture and then later kind of depreciate that mine behind the scenes. It's like, oh, it looked good at this time. Oh, So it's definitely a lot of digging through numbers in that case. Um, and I think that's one more argument for Silvercrest as well, is they definitely are giving very clear numbers and they talk about these things. Okay. I've watched a lot of videos of the other silver mining companies, and there seems to be quite a bit of dancing around the numbers. And Glenn said that. I noticed that the other day, where there's a way to just be like, oh, look at how great this mine is. Like, here's pictures of it. Here's a geo survey. And there's not really a mention of like, how much do we spend to set up the mine? Um, how many years until we get the first ounce? When does it become profitable? What's the cash flow looking like? Right. And that's kind of scary for some of these other companies, in my opinion, because those are pretty important metrics and many others, right? So that will be all for the evening. Once again, I'm off tomorrow, so I'm really gonna try and hammer through it. Hope you have a good one. Hopefully you enjoyed this video. Please share it with friends and family. I don't make money from this. I don't seek to make money off of this channel. I think it's important for people to learn, right? Education in this area, economics, finance, whatever, very important. Excuse me. And so I see it first as an educational opportunity. You can learn about other businesses. You can learn about commodities in general. You can learn about the Federal Reserve. I don't see any sort of loss there for a little bit of your time. Secondly, I think there's very clear plays to make a lot of money, right? And you know, I'm pretty set. I'm fully invested in it. So, you know, I'm not trying to give bad investment advice. I don't give investment advice, period. I don't charge money for this or anything SEC. I want people to have knowledge for their investments. Okay. So I'm not giving investment advice. I guess I misspoke there. That's all right. Um, so what was I saying there? So educational, right? Hopefully you learn something new that you can just look at over time down the road, right? Hopefully you can make a better investment decision for yourself based on these videos, based on what you've learned, going forward in what looks like a very, very huge mess that's going to occur. And I think it's probably within the next 3 months, right? Could be wrong, maybe a little bit longer, but hey, we'll see. Not good. What else? I mean, I think that's really about it. Yeah, so have a good one. You know, really stock up on food, guns, bullets, and silver, most importantly, because we're looking at an extremely rough 5 to 10 years, maybe. I don't know. The economy is in dire straits with a lot of very bad red flags starting to go up. Bing, 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 bing. And a lot of people are talking about this. People have had their Twitter accounts banned over this. So uh-oh. Hey, good luck. You know, join me. Get on the boat. All right. Bye-bye.